Good morning, Chandan. First, I just wanted to start out with telecom. I don't know unless the market just woke up yesterday and suddenly realized that Jio is around the corner. That is not possible. What it seemed to me yesterday is that nobody wanted to go long in the stock, and the shorts basically had a party yesterday. Oh, let's just slam every stock. But the problem is when you do that, you better have strong pockets, because if you're just punting around, the next morning you may get an institutional order for 1 million shares of Bharti, and now you repay everything, and now you're calling your broker, oh, margins are not there. I'm just wondering, Chandan, because yesterday to me it looks like weak hands thinking, okay, since the cats are out, let the mouse play.
Yes, the same kind of scenario happened in the most of the telecom counter. And if I look at the open interest condition in most of the telecom stocks, Bharti Airtel added open interest by around 19% with decline of 7%. Idea added open interest by around 25% with decline of 11%. In fact, the Arcom also added open interest by 10% with decline of 9%. So these three stocks have added open interest by more than 10 to 25% with the price decline of more than 7 to 12, 13%. So overall, the build-up of shorts are being witnessed in the counter. And interesting part is that the trend is clearly negative. These stocks are not seeing the selling in last trading only, but they are falling down from last couple of weeks or couple of months. So here the trend is negative. It's very tough to catch the falling knife, and especially when there is some huge selling pressure and the build-up of short position in the counter. So as of now, because of the overbought, oversold scenario, some bounce back might be there, but that bounce back would be used as a selling opportunity as buyers got trapped and the sellers are at upper hand, and because of that, profit booking decline may continue, and that is the reason that I am looking 4 to 5% decline on immediate basis in most of these stocks.
Okay. What about some of the auto names, Chandan? How are they looking to you this morning?
Yes, in auto counter we have seen the strong outperformance, and auto counter had rallied well and continuously showing the sign of strength. First, talking about the Maruti, this stock is now hovering near to its lifetime high, has seen the consolidation for last 3 to 4 weeks, and given the breakout above 5100 kind of zone, here the trend is positive. We are continuously recommending to go long, suggesting to buy with a stop loss of around 49.50, 49.70 zone for the potential up move towards 51.50 to 5200 kind of levels. In Hero also we have seen the fresh moment. The stock has been making higher tops, higher bottom formation from last 3 to 4 weeks. Yesterday it witnessed a consolidation move, but overall trend is positive given the highest daily close and all set to move towards 36.50 to 3700 zone. So Maruti and Bharti Airtel looks quite strong, while in mid-cap TVS Motor also looks strong. The stock has given the breakout about 315, but has seen consolidation. Here we'll go for buy on decline. Let it come to 317, 318 zone. Put the stop loss near to 312, and again wait for upside move towards 335 to 340 zone. So these selective auto counter are likely to outperform and may rally in the market.
All right, Chandan, one of the things that I thought was very interesting about yesterday's market, you can look at it as the market closed lower, but the way I look at it, that the market held up beautifully in spite of Reliance going down more than 2%, in spite of every telecom stock losing almost 10%. I thought if you just eliminate this one particular newsy item, the rest of the market is still running on boosters.
Yes, I do agree with your comments, and I think the market is quite strong. And the way we have seen the liquidity in last 2 months from the FI's front, the market is witnessing sustained buying interest at every decline. If you just look at 5 to 6 days back, the Nifty made low near to 85.40 and suddenly rallied by around more than 250, 300 points. And before that, it was just consolidating in a range for a 20-25 trading session to surpass 8700, 8728 zone. So the sustained buying is being witnessed at every small decline, and market is witnessing fresh buying whenever we see the profit booking decline. So that is the healthy sign of the positive market. And the important thing is the market is making high tops, high bottom formation from last 6 months. Even after the movement of around 27-29%, the Nifty and the Sensex are not ready to surrender, and the sustained buying is being witnessed. And I think there is a positive scenario now on immediate basis till it holds above 87.28. The momentum may remain intact. Yesterday, market witnessed some profit booking because of the two reasons. First was the selling in the telecom counter, and second was the Bank Nifty weekly expiry, and because of that, Bank Nifty declined by around 150 points in last half an hour. So I think these two reasons were the reason of the Tech Nifty by around 50 to 20% on 20 points on the downside. But overall, I think if Bank Nifty manages to hold about 19,500, it has potential to rally towards 20,200 to 20,500, and in that scenario, Nifty can easily jump to 88.44 and head towards 9,000 kind of zone in next coming weeks.
Ruchit, good morning. How are things looking to you today? What's the index suggesting on the charts?
Hi, good morning, Ava. Well, overall, the trend for the markets is still positive. We have seen a breakout of 1.5 months of consolidation during last week. But the only cause of worry, what we have seen yesterday, was the market breadth. We have seen that in spite of this positive momentum going on since last 3 trading session, in yesterday's trading session, we have seen that the market breadth was much negative, and specifically among the mid-cap counters, those who have already rallied much higher, we saw some sort of profit booking coming in around these high levels. So our take is that now going ahead for next few trading sessions, the index would again consolidate. We are not anticipating any major up move or down move from current levels. 8700 to 8850 would be the range in which index for next at least 3-4 trading sessions should go. And within this range bound, there would be more of a stock specific action now rather than the entire market or the entire basket of the stocks moving in a particular direction. So one needs to be more of a stock specific at this moment. And on the index front, since there is no negative sign or no signs of reversal, one can trade with positive bias.
Good morning, Ruchit. I just wanted to get into a little bit of the telecom part of what's happening. And I've seen this phenomenon maybe 15 years ago, exactly the same, as if the world is going to shut down now, and maybe telecom is going to run from outer space. It's not going to happen. Is it possible the shorts get trapped? I know it's not a fully technical question because on the charts, these Idea, Bharti and all are looking bad, but you have to also look ahead and say, can this be a short trap?
Good morning, Ashu. Ashu, overall, if we observe the positionally what this Idea and Bharti has done. Now we have seen last 2 or 3 months, most of the large cap stocks giving quite a good up move, whereas these stocks were already underperformer. And usually market sense is that whenever such underperformers are there and there is some bad news coming in for these stocks, then we see some sort of short building, aggressive short building happening up, and also there is no supply, there is no demand over here. So it's all about demand and supply if we see. Technically, Bharti around 290, there is some harmonic pattern formation around 290, 280 range. So I don't think that the stock would go straight away below this 290, 280 levels. From here, definitely 20 rupees downside comes to 4-5% down from current levels. But I think around 290, 290 to 280 range, the stock would take a support and again give a pullback move from there. So in case anyone is looking to catch these stocks for a trading up move or for a pullback up move just because the momentum readings are oversold and the stock has fallen very sharply, then I think one can look to buy Bharti around 290 to 280 range, keep a strict stop loss below 270, and one can expect a pullback rally. Definitely the volatility would be quite high because we have seen since the down moves are sharp, then the pullback rallies also have to be very sharp. So around 290 one can look to buy Bharti Airtel, whereas I would really advise to avoid Idea as of now, because we have seen that even among these specs, both Idea and Bharti, Idea was one of the worst underperformers. So the supports have already been breached in Idea. So I don't think that one should do any kind of bottom fishing in Idea. Technically support would come around 70 levels, but still I think I would prefer to go long on Bharti for a pullback move from 290 levels.
Okay, what about auto, Ruchit? We've got a whole host of sales figures that are out and they're looking pretty good. What's on your list from the auto pack?
Yeah, so if you first observe the Nifty Auto Index, then definitely this sector has been in an uptrend by forming higher tops and higher bottom. And even at current levels, we have not seen any kind of selling coming in this sector. Even last 1.5 months, when the markets was probably in a narrow range, we have seen some sort of good consolidation happening in auto sector too. And the heavyweights such as Tata Motors, M&M, Maruti, all have shown signs of strength once the breakout was there. So I think this Nifty Auto Index would do well, and going ahead, maybe even auto ancillaries would show a follow-up up move from current levels. Amongst the auto packs, we are recommending to go along in M&M. The stock too has consolidated in a narrow range, and from the lower end of the range, again the stock has started moving higher. Now the thing is that when the up moves were there in the stock, the volumes were good. And during a sideways momentum, the volumes are less. So this shows that more of a time-wise correction has been happening in this stock. So we are expecting a resumption of the upside momentum towards 1474. So amongst the auto pack, we are recommending to go long in M&M around current levels, keeping a stop loss below 1425 for target of 1474.
Right. Chandan, I have a couple of stocks that I wanted to just bounce off with you. One was IIFL. I don't know how many of them are actually listed. Bajaj Finserv, Group Finance, Bajaj Financial, Raymond, Jubilant, if any of them are on the F&O.
See, I first talk about Bajaj Finance or Bajaj Finserv. Most of these Bajaj companies have done well, especially in last 3 to 4 months. Talking about the Bajaj Finserv, the stock is continuously making higher tops, higher bottom formation, and recently given the consolidation breakout above 2950 kind of zone, which was the high made in the August 2016. And after this surrounding formation and the consolidation breakout, the stock is getting the next sign of the momentum with rising trading and the delivery volume. So here we have potential to rally to us 3200 to 3250 levels on the upside, and traders can keep stop loss near to 2900 zone. That is also the support near to his 50-day moving average. Talking about the Bajaj Finance, that is the F&O counter, this stock has seen the tremendous movement in last 3 to 4 years, and now after the consolidation of last 4 to 5 weeks, it is started to perform. It has given the breakout about 10,350 and now all set to head towards the new high of 11,750 and then much higher levels. So the Bajaj Finance and Bajaj Finance both are looking good. Talking about the selective financial counter, the JM Financial has been consolidating in a range but finding sustained selling pressure near to 68 to 70 kind of zone. So let it 68 to 70 zone, then only the trend may start for the positive move for a target of 77 to 78 level. So as of now, let it surpass the hurdle for the next leg of rally.
All right, let's take a very quick break. We'll come back with more strategies in just a moment.
Thanks for staying with us on Dealing Room. Let's take a look at some of the mid-cap side of the market. I'll just mention a couple of stocks. We'll go through them, each one of them, because the charts are exceedingly strong there. Hindustan National Glass. This stock, it's almost like a day trade. It's just been going up almost every day you can think of. Okay, that's okay. I mean, some of these stocks are difficult for me to find, but that's how the market is right now. So Berger Paints, Kajaria Ceramics. Let's also look at Nitco. So a lot of these building material, and I'm giving you the ones where the charts are very strong. Another group of stocks that, again, as I mentioned yesterday, you want to keep your focus on is the Hindustan Construction Companies, Punj Lloyds, Sadbhav, PBA, GVK, GMR, because again, I don't know when the government gives that 75%, but that's a major move. And I heard the managing director of this HCC actually mentioning that if that happens, they cut their debt by half. Now, just remember, if you don't have water for 6 days and you're in the middle of a desert, even 2 ounces of water can just change your life. And that's the kind of struggle some of these infrastructure companies are facing. So this is a very big move for them if it does go through. But let's start with the stronger charts first. Ruchit is there? Yeah, okay. So Ruchit, Hindustan National Glass, if you've looked at it, Berger Paints, Kajaria Ceramics, also Nitco. And in the meantime, I also wanted to ask you about the momentum we are seeing in penny stocks like GMR and GVK. That momentum is there, irrespective of whether you call them penny or something else.
Ashu, first coming on to Hindustan National Glass, usually it's a very low volume stock. We have seen even in last two trading sessions, although the stock was up on the upper circuit, but the volumes are quite less in this. So I think from trading perspective, it's very difficult to get into the stock now. Even if you get into the stock with smaller quantity, then the risk reward is not that favorable to go long. As far as levels are there, I think the resistance for the stock would come around 140 to 153. So we can see another 10 odd % upside from current levels in this stock. Now in the paint sector, Berger Paint definitely has been forming this higher top and higher bottom structure, and the trend for the stock still looks quite strong. So I think on the higher side, the stock has potential to go up to 280, 282. So even from current levels, any sort of minor declines comes up to 250 or 255 range, then I think one can look to go long in Berger Paints for a target of around 280. Amongst this construction sector, although after this positive momentum we have seen in HCC in last couple of days, I think one should still wait for the broader trend for the stocks to turn positive. One should be very stock specific. We are quite positive on NCC amongst in this construction space. NCC has been forming this higher top higher bottom structure, and after giving a breakout from a consolidation, the stock now has seen good volumes coming in on up move. So I think up to 92 or 93 the stock could go in short term. So one needs to be very specific, stock specific in the infrastructure space. NCC, and another stock which I would recommend in this space to go long is IRB Infra. IRB Infra, even last, if we observe the weekly or the monthly charts, last one and a half years, the stock has been consolidating in a range. And now prices from the lower end of the range, you've seen some sort of good volumes coming in during the last week during the up move. So I think IRB Infra could do well amongst this infrastructure space going ahead. Any dip around 220 should be used as a buying opportunity, keeping stop loss below 213, and we are expecting an up move up to 245, 246 in this. So although these smaller stocks are moving higher, such as GMR Infra and all, but still I think one should need to stick with the names which are trending good and in which volumes are also good. So I think NCC and IRB Infra are the two picks which we are recommending from this construction space.
Ruchit, I think you also have a call on Sun Pharma.
Yeah, Abha, I would just like to rectify the error on M&M call first. M&M, there's just a typing error. I think we have a long call for target of 1515. It was mentioned as 1474. So with a stop loss below 1425, the target for M&M long call is 1515. And my second call, which I have recommended today, is a buy call in Sun Pharma. Overall, the pharma space have seen a good consolidation or an underperformance in last one and a half months. Now on the weekly and the monthly charts, the trend following indicators for Sun Pharma, which is super trend and the parabolic SR, has turned positive now. So I think a pullback move or even a resumption of uptrend could be seen from current levels in Sun Pharma. So keeping a stop loss below 745, positionally one can go long in Sun Pharma for target around 815.
Okay, I'm just tracking the pre-open quotes for you on your screen. Keep an eye on those pharma stocks. Actually, we've also got Biocon, Natco, etc. In news, Teva's lost a decision on the validity of their third patent, the Copaxone patent, which is likely to impact some of those names. Lupin saw a bit of an uptick in the pre-open, may settle down. Idea is still trending lower. Bharti will bring up Reliance as well. Lupin's looking good so far. So let's take a look at RIL. Yeah, just a marginal uptick at the moment. So telecom seems to have quietened down. We'll get a check on PVR as well in a few moments and see what's happening there. We've got those are the few major stocks in the morning that are in focus. But as of now, it's looking pretty steady. Sensex is still seeing a slightly bigger uptick at this point than the Nifty. But we'll see how that settles down.
All right. So these initial quotes are all over the place.
Yeah.
Let's start off with Reliance. Let's see what's happening there. If you have a quote on Bharti, it will be interesting to see where it is. I would say that when an overall market has this kind of strength, I would not try a short anywhere. Especially, I just want to ask you, do you really think anybody understands the dynamic of this telecom business or how it's going to look 5 or 10 years from today? No. Nobody understood it 15 years before, nobody understands now. Technological obsolescence, technology, anything can change it. So don't get excited by 1 day or 2 days. This is a business that could see. I picked up one of these classic investment books, and it's from the 70s. I couldn't relate to one company. Not a single company exists anymore. That's the situation. So you will see that, and so let's keep our focus overall. Let's just do we have Jubilant? Can we bring up IIFL if any of those quotes come at this time? I just wanted to see. Just keep your focus on the market. Overall, the market has exceedingly high strength levels.
Chandan, I know you have a few strategies on your list this morning. Anything you'd like to run us through? Chandan?
Yes, talking about the trading ideas, we have positive view on the selective stocks, and I think after some consolidation, Nifty may again start the next leg of rally. So talking about the trading calls, we have positive view on the Amaraja. The stock is given the breakout and now hovering near to its 10 to 11 months high level. It has seen the strong open interest addition and surpassed the multiple hurdle of 945, 950 zone, and now all set to head towards 1010, 1020 kind of zone. So one can buy with a stop loss of 940 for the upside target of 1010. Exide industry also is given the breakout, and I think all these battery stocks may perform. A second trade is buy on Century Textile. The stock has been making higher top side bottom formation from last 3 to 4 trading session, and given the classical breakout by crossing and holding above 725 zone. So expecting it to move on higher side, although the stock is having a high beta, so volatility might be there in the counter, but one can buy on a small decline with a stop loss of 715 for the upside target of 760. And talking about the negative trend, now I think the all marketing companies are making the bottom process. It has failed to surpass the crucial hurdle of 650, 610 zone, and now started to decline by taking hurdle near to its moving average. Also, we have seen some liquidation of long position. That is also giving the hint that the traders are getting out from the system and booking their profit in the stock. So BPCL I'm recommending to sell with a stop loss of 605 for the downside target of 565, and BHEL is another counter where I'm expecting a profit booking decline. The stock has failed to move up and set to give the breakdown below 133 half zone, and in that scenario the stock can go down towards 129 to 128 level. So here one can buy with 130 put by keeping the stop loss of 4 rupees for the potential downside move, and the target of this put was 11 to 12 rupees.
Chandan, can we just work on a strategy, let's say on just the Nifty and the Bank Nifty? And on the Nifty, again, the more I see the market, the more I think maybe there's no reason really to even buy a put immediately. Because whenever the correction does happen, now we have moved into another range, Chandan, that whenever the correction does happen, it may happen when the index has gone crazily high, which is maybe 9,000 or 10,000. So maybe the kind of puts you need is a put really far out of the money, so to speak, because minor corrections won't do anything to you. So could we buy an in the money call and maybe really out of the money put? And all I'm saying, essentially the put can be, let's say, at 8,000, and the call can be somewhere near today's value. Is that the kind of strategy, just looking at the changing nature of the rally?
Yes, first looking at the trend of the Nifty and the Bank Nifty and looking at their correlation, let me just describe the analysis based on the derivatives and the technical data. Bank Nifty has been making higher top, higher bottom formation from last 6 series. In the August series, Nifty was down, but Bank Nifty was holding the gains. And after the consolidation of last 15 to 20 trading session, Nifty was taking time to cross the 8700 zone, but Bank Nifty crossed 19,000 and rallied by around 900 points. So Bank Nifty is comparatively stronger than the Nifty index, and we have seen the rally of more than 10 to 15% in the Bank Nifty compared to 7 to 8% movement in the Nifty index. Now, if you look at the rollover were 84% in the Nifty compared to the 73% of the Bank Nifty, and the Bank Nifty to Nifty ratio spread, which is now 2.25, used to be in a range between 2 to 2.30 kind of zone. So now the ratio and spread is near to the upper band of the zone, and I think Bank Nifty might outperform for a couple of days or couple of weeks before this band may take a pause. So as of now, the outperformance may remain intact for the Bank Nifty. It has given the breakout about 19,000, and now the support is shifting to us 19,350 to 19,500 zone, and because of that, it can simply head to us 20,000 to 20,250 kind Now looking at the Nifty and the structure of the hedging position, as of now the put call ratio is near to one level. We have seen fresh call writing at 8800 and 8900 strike, but put writing is intact at 8600 and 8700 strike, and that's why the put writers are holding the market. Now talking about the strategy of taking out of the money of 8000, I think that is not the worth buying right now, because the market has marked multiple support at every small decline, talking about 8728, 8665, 8580, 8540, 8475. So market has to cross and hold below all these levels to start any negative trend of the market. But yes, those who are looking a conservative view can buy the put of 8600 to hedge the market with the long position in the selective stocks, for the hope that market has potential to move on upside, while they are paying the premium of around 1% of the entire value to buying the insurance.
All right, Ruchit, I saw some kind of flicker from sugar coming through in the last trading session. We also saw a lot of flickers coming in from building materials that I had mentioned, but also some textile stocks. But one of the issues, Ruchit, that I'm facing is that even when these stocks stop running for 2-3 days, the volume disappears. It's almost like somebody is sitting with the gates of the dam. He decides to open it for a few hours, and then for 1 month it goes dry. What do you do on the mid-cap side then? Because what I'm not getting is, I may be getting a shorter term volume and price confirmation, but I'm not getting a time confirmation in many of these stocks.
So usually when such moves happen, Ashu, what one has to see, one has to look from a broader perspective, and what last 1.5 months or last couple of months, what the stock has done. When we see that when the stocks are moving down, the volumes are less, and when the stocks are moving higher, the volumes increases. So that's a bit of positive sign, in fact. So one needs to definitely, it's difficult to time that when the market would again resume the uptrend, or when the stocks would again start moving higher with increasing volumes. But if you just leave the 5 or 10% of the lower side of the bottom, and then when you see that the volumes have started increasing and again the stocks have started moving higher, that's the time you need to get in. So if you see the sugar stocks now, what they are doing, that the prices are going down but volumes are not that high. So which and the previous trend definitely is positive. All the stocks were making higher top, higher bottoms, and the volumes were much good when the prices are going higher. So now if the prices are going down and the volumes are not there, which means that those long traders or those long positions which have been built during the uptrend are still there in the system. So unless there is a higher volume again coming in on declines, that's this corrective move is not a sign of a worry. I think on the lower side, in case if Balrampur Chini comes around 100 or around 100 to 95 range, that would be a good buying opportunity, since, as I said, during the up move the volumes were there, which means that accumulation has happened but the distribution is not happening. So this is just a corrective move amongst this sector. Balrampur Chini amongst the sugar sector could be accumulated again from 95 to 100 range.
Okay, 5 minutes to go to open, and we've got quotes in. So index is just flat. Tata Motors, Hero, so some of those auto names, and Tata Motors a good bunch of sales figures out as well. Bosch seems to be doing okay. Z as well. Post all the news this week, holding fort. Ultratech, ICICI, some of the other names on the upside right now. And on the index, breadth is intact. Ashu, Idea is still looking a little weak, and Bajaj somehow is not really participating. Bharti is also a little weak today.
See, I wanted to share an example with you, Ava, that you remember GMR and GVK used to be very heavily institutionally held. So the reasons why you get excited may change. 10 years ago, you were excited about infrastructure. Today, you're excited about telecom. But you see, brass tacks of the business has nothing to do with excitement. So what happens is that when the institutional investors got out, GVK and GMR turned into penny stocks. Now, you see, GVK and GMR may not have been owned by Birlas. So Idea is not going to turn into a penny stock, because, you know, if it starts to go down, they'll probably just buy their own stock back up again. I mean, that's basically what is going to happen. So Idea is a different ball game. As far as Bharti is concerned, I think you need to look at the institutional owners of Bharti, which includes people like Singtel. If it gets cheaper, and Singtel I think just made another investment, if it gets cheaper, well, Singtel will just buy, or the government of Singapore will just pick up another 10%. So the downside may be limited in some of these stocks, Abha, given the kind of ownership. So in infrastructure, the ownership was very weak. In them, the ownership is actually very strong.
Fair enough. Ruchit, did we talk to you about some of these infra names? And, you know, also the ancillary plays. I mean, we've seen the entire pack on the back of this, you know, the order upticks and sort of the growth themes. So whether it be mid-cap infra, which is currently the one that's moving, but even cement, paints, and all the ancillary plays have been also looking good lately.
Yeah, although we have seen a good positive momentum coming in some of the infra names, but as I just spoke earlier, also one needs to be very stock specific in this sector. Among specifically construction sector, we are positive on IRB Infra and NCC from short to medium term perspective, since these stocks are showing some strengths and good volumes are coming in. Cement names, I think still the mid-cap cements would continue to move higher even from current levels. We have seen a good rally coming in on India Cements, which is still showing strength. So I think this upside momentum in cement could continue, specifically in mid-cap cement names such as India Cements, whereas large cap names such as ACC and Ambuja can go into some sort of consolidation phase from current levels. So amongst this entire infrastructure sector itself, I think one needs to be more of a stock specific now, rather than thinking much beyond that entire sector or all the things would move further higher from current levels. So among stocks, NCC, IRB Infra and India Cements are the three stocks that we are still bullish on.
Okay, we're just counting down to open now, and a few more seconds to go. Index looks a little quiet this morning, but we're still maintaining a strong trajectory at this point. We'll have Mahantesh Sabad also joining us in just a moment and get his take on things as well as they stand. Watching out otherwise for a few more of those sales figures later today, but auto clearly will be in focus. Telecom still seems to be muted this morning. And the banks have just been about steady. I guess when they move, we'll perhaps see that next leg up on the index as well. Let's get you those quotes as they start to come in, and just hitting the screens now as we speak. We've just got a marginal uptick coming in on the index, 8794. Tata Motors up 1.5%. Heroes following suit, and Tata Motors DVR as well. Ultratech, Bharti Infratel. We've got Eicher Motors, it's up about 0.7% right now. Lupin is looking good this morning. ICICI Bank, BPCL and Hindalco, some of the other movers. ITC also moving up steadily, 7.8%. They're likely to launch a whole host of new products this year and have been in the news a fair amount lately. Bharti is now up 0.5%, and some of the other cement names are also playing catch up. So a couple of those pockets of the market is where we're seeing action. Banks are quiet, Reliance is quiet so far. And on the downside, it's ONGC, BHEL, Coal India and Infosys.
Also, some of the stocks that we'll look at today, let's start out with automobiles. Now, it's possible that the rally already took care of the numbers we saw, or it may still be Tata Motors you mentioned. Let's bring up Maruti Suzuki. Let's also bring up TVS, Bajaj Auto. Especially the automobile stocks, they are at really inflection points. Today is supposed to be the strike, right? I thought all the unions are on strike. They want 18,000 bucks. Oh, it was I think it's today. Yeah. So they want 18,000 bucks. So yeah, I hope you get your 18,000 bucks, because then motorcycle sales will they'll have to get some motorcycles from China, because there's not enough in India. So that's great for the markets, and that's what I'm saying. News that may not be great for the economy is great for the markets, and that's what you're seeing. But there are some other stocks also. Let's bring up Hindustan Construction, because that entire group of infrastructure stocks that look the value of one bottle of water is not to somebody sitting here, but sitting in a desert for 7 days, didn't have water, the value is a lot, and that's their situation. So some of these stocks, even little cash flow can really help them, and that's what you may want to take a look at. Apart from that, you got an eclectic mix. We had Raymond moving up. Can we check if Raymond has continued that run? And then beyond that, let's see some of these NBFCs, which is, I saw some Reserve Bank of India thing that the banks can sell loans to each other or to NBFCs. Okay, so if the loan was bad here, does it get any better here? I don't know. Maybe, but maybe it allows you to circulate risk just like the CDOs and CDSs did, in the subprime crisis. So, but anyway, finance is on a serious note. All financial stocks are looking very strong. Kaval?
Okay, let's pull up PVR because it is moving today on the back of some speculative news, but nonetheless, keep that one on your radar. We've also got HCC that continues to move up. Welspun's up 5% today. Simplex Infra, Punj Lloyd, a couple of the other movers there. Phoenix Mills, Shipping Corporation as well. Delta Corp continues to move up 2 to 3%. Inox is also moving this morning. We seem to now have a pattern here with some of these names that, with some of these Inox PVR types that move every Friday, I think, actually, seriously. So a whole host of mid-caps there. PVR, Ruchit, do you have a call on that stock?
Yeah, but overall the stock is showing a good signs of an uptrend. We have seen that after a consolidation of couple of weeks, today again there is a gap up opening, and it's just a sign of continuation of the broader uptrend. So I think the stock would move higher further towards 1300 or 1325. So one can look to hold any long positions if there are there, and in case if anyone is looking to buy fresh just from a trading perspective, even at current levels one can go long, keeping a stop loss below 1190 for target around 1300 to 1325.
Okay, I think Mantesh is also with us. He's Deputy Vice President Research at SBI Capital, SBI Cap. Mantesh, thanks very much for joining us. You've been long enough in the market to see that there have been one or two big structural shifts in telecom, but it's not a question of a structural shift. It's a question of who has survived and who has prospered. So when I look at the universe, while the market may have overreacted yesterday to Bharti, Bharti's pretty much withstood. If anybody in telecom has withstood the test of time, they have. They've been around since every price cut, and they've actually grown and acquired more licenses, more circles as we used to have in the olden times. So your thoughts, and also they have strong institutional promoters like Singtel and what have you. What happens next in terms of valuations for, let's say, an Idea, Bharti?
Okay, there are two things. Okay, here you've talked about the incumbents being very strong players themselves for quite some time, and yes, of course, they have a strong management, come promoter kind of backing. But the good news because of the Reliance Jio launch is that we're going to see a huge spurt, and that's the structural shift that we will see. We will see a huge spurt in the way data gets consumed in our country. And generally that should be beneficial to a player who has a wide reach, good quality, strong clientele, and so on and so forth. So when I look at these parameters, then the incumbent players actually score over a Reliance Jio. Reliance Jio is still untested. We don't know the quality. We of course know that the data packs, etc., are very cheap. And it will bring in useful competition. So as the experience for a customer grows in terms of his consumption of data, the service provider who brings in the best service, quality service, will survive. So I don't see any reason for a player like a Bharti or an Idea not to survive under such onslaught.
Okay, and well, does the same logic apply to your take on RIL itself? Because even yesterday we actually saw a quieter close on the stock with some worries about that aggressive pricing.
So for Reliance, if you look at the stock's performance over the last 3-4 years, it's been flattish. What it tells you is that this whole foray into the telecom sector that they were doing was consuming a whole amount of cash. Now, as these services are about to be launched and commercial sales will begin, the good part for Reliance is all that investment by people, that means from a stockholder's perspective, now it will be treated as if it's a sunk cost. So herein, there's going to be upside that is going to be visible even for Reliance as well. So, but what remains to be seen is we don't know at this juncture who will emerge as a stronger player, whose service will be a good quality service, who will get the maximum incremental market share. Now we are talking about incremental market share in data, just as we used to talk about incremental market share a decade back when telecom operators were becoming aggressive and aggressive. So the focus will be on incremental market share, irrespective of the competition in terms of pricing.
Right, Mandish, you brought up a very interesting question, and sometimes instead of just looking at telecom, I just think of other things. So let's say I'm a new manufacturer of breads or a new manufacturer of a cola drink. Nobody assumes that I can get up the next morning and have a nationwide distribution, and just because my bread is priced at 80% Britannia's bread, I'm going to sell more. I could say the same for cars or for whatever, because many of these things require distribution, service networks. You need to be serviced properly. You need price point. I understand, Mandish, but is the market overreacting to how structurally things will happen in the overall industry? Because yesterday the markets almost seemed to say, oh, everybody else is out of the business. It never happens. And I'm just using an extreme comparison with somebody who manufactures bread. I mean, manufacturing, giving 80% discount is not the same as having a distribution network or having some kind of faith with clients or customers.
I think that's a very good analogy that you have provided, and it in a way buttresses the point that I was also trying to tell you, that incumbent players would be happy to see that here there is a player who is going to drive a greater consumption of data, greater penetration of telecom services, and that affords them or offers them a chance to really strengthen their existing network. So yes, the new player will have far greater challenges in terms of getting a good distribution network in place, getting the quality right, earning the brand loyalty from their customers. So Reliance will go through all those challenges, but Reliance is not any other, if I were to use the same analogy, a bread maker. Reliance is a very strong, financially sound corporate. So they will take it to the fight to the last mile, and therefore I think the overall telecom sector will witness some form of valuation re-rating. And of course, to the question that you posed, that you pointed out, that are the existing telecom makers going to be out of business? Definitely no. So therefore, the stock falls of yesterday seems a bit of an overreaction and brings these telecom stocks into a good valuation zone once again.
All right. Mahantesh, what about, the banks and NBFCs? We've had a whole spate of reforms by the RBI recently trying to open up ways in which, they can receive funding, give out funding, now perhaps, pass on loans and so forth. I mean, what are you making of some of these measures? Do you feel that, that things are now going to sort of start to shape up for some of the battered down stocks in this space?
So these reforms that you're talking about are welcome, but they're incremental changes. What we are looking from the banks is that we will see a huge amount of recoveries coming in the year, in the months to come, even into the next fiscal year, and therefore from a year-on-year perspective between FY17 to FY18, we should see the whole NPAs that was a problem with banks in the last fiscal year and some portion of this fiscal year already will start to disappear. So structurally, all banks will become very sound, and if it is if it coincides with an upcycle, and which is what we are going to see in terms of the economic recovery, then credit growth will shoot up. So along with credit growth, you will have structurally sound banking system, and I see no reasons for the banks to actually therefore re-rate as we go forward. So these incremental reforms are welcome. They are good. It's not as if this is something out of the ordinary.
Ruchit, just give me a minute. I'll just come back to you. I just wanted to take one question in. Mantesh, usually when we start to have bull markets or the sign of a bull market or an asset class market usually is that the market becomes non-discriminating of newer entrants. And we saw that in the dot-com boom. Guys selling Pampers seem to have gotten billion-dollar valuations. I was talking about, the financial services business. The entire banking industry around the world was built on the ability to be conservative. In fact, 100 years ago, bankers wouldn't even put their shingle outside saying, I'm a bank. They expected you to be introduced by somebody. Banks need to have an asset liability mismatch, have to build customer relationships. But in this new boom that I'm seeing in NBFCs, there is a certain assumption that the more you lend, the faster you lend, the more you lend to the lowest common denominator, you're doing a great job. And I haven't heard a single conversation about mortgaging the future to basically now look as if you're doing a lot of business so that you can get a lot of money from IPOs and other things. Just your thought, Mantesh. It doesn't look right to me because banking is a conservative business and it always will remain. And if you take too many risks, you're only doing it at the future's cost.
No, you're right. So you have actually made a distinction between the banks and the non-banks. NBFCs are non-banks, and yes, in terms of the valuations that we have seen for some of the NBFCs, it's becoming a bit too dicey. It's grown. Some of the stocks have rallied far too away from the valuations, and therefore the bubble seems to be visible in some portion of the NBFC space. Not in the bank space, so in the non-bank space. So what we will see going forward is there will be a semblance of rationality coming in even among the non-bank space. Today, if you have to grow, if I take the perspective from the non-banks, then today if you have to survive in business, you have to grow very fast. You have to grow faster than your nearest competitor, and that is what is perhaps happening right now in the country. And therefore the growth for these companies will be very fast, will be very high, but the valuations may not necessarily sustain at these levels. So between the trade-off of valuation and growth, we will see valuations fall, growth continue. The stocks may continue to rally for a bit more because of this trade-off for a while more before they start correcting.
Ruchit, anything striking out to you in this session so far from the broader markets that you'd like to leave us with today?
Well, I think apart from what we have discussed, I would just prefer to give one more stock. Sept is looking good at current levels. Amongst the tire space, we have seen some good momentum picking up in Apollo Tyres, MRF, Sept in past couple of weeks. Well, Sept, although amongst this sector has underperformed in last couple of weeks, but seems that the stock would give a breakout of a consolidation phase which has been going on since last couple of weeks. So I think if it manages to cross above 920 today, then the stock has potential to rally up to 1020 levels. So one can go long above 920 in Sept, keeping a stop loss below 871 for target around 1015.
All right, Ruchit, thanks so much for joining us this morning. Mahantesh, I want to just get your take on some of the latest auto sales numbers as well that have been coming in. They've been looking good, and we're now entering a pretty active period. So, what would be your suggestion when it comes to the auto space?